This is not financial advice. I'm recording my thoughts about a high risk, high reward stock, and that is Meta. It's currently trading at about $93 with a market cap of about $250 billion. When I say high risk, high reward stock, it means that there is more probability that the stock is going to stay where it is or even go to zero than going to do a 3x or a 4x. First, I'm going to talk about Meta's business model and why the stock is down significantly this year. Then I'll talk about the reward and then the risk part. As we all know, Meta generates most of its revenue from advertising. They own WhatsApp, Messenger, Instagram, and Facebook. They also have multiple other subsidiaries, but they operate in the metaverse. And since metaverse is not making any money, I'm not going to talk about those companies. Meta has about 3 billion monthly active users and 2 billion daily active users. Recently, the stock is down significantly, and I could think of 5 different reasons why the stock fell that much. The first is this slide from their recent earnings, and it shows that their free cash flow fell to 173 million in Q3 of 2022, and in Q2 of 2022 they had about $4 billion. What this means is that Meta is not going to buy back the stock that they offer in the form of stock-based compensation. So we will see some dilution in the coming quarters. Second is TikTok. The amount of time an average person spends on TikTok is significantly higher than what they spend on Meta's platforms. Apparently, this is because of TikTok's better algorithm that lets users spend more and more time on its platforms. Good news is Meta is spending a lot of money on that AI algorithm to catch up to TikTok. Third is Meta's operating expenses are skyrocketing. For example, in the past 4 years, they have tripled their workforce, so we have to pay a lot of money in terms of salaries, right? So that's why their operating expenses are skyrocketing. Number 4 is Apple's iOS privacy settings, which has made it very hard for Meta to track user data. We could clearly see its effect on Meta's revenue and net income, but it looks like Meta is working hard to change their algorithm to minimize this effect. Last and fifth reason is the metaverse spend. A lot of people are not believing in this metaverse. They don't think metaverse is going to generate any revenue in this coming decade, so they think it's a dead investment. But it looks like Mark Zuckerberg is doubling down on metaverse investment, and that is also causing the stock to plunge. Let's talk about the reward part. As we all know, the stock price is directly proportional to the net income a company makes. In 2021, Meta made about $40 billion of net income, and even with the effects of Apple's iOS privacy change and macroeconomic headwinds, for the trailing 12 months, they made about $29 billion of net income. And we do know that Meta is working on their algorithm to catch up with TikTok and minimize the effect of iOS privacy changes, right? So I'm counting that Meta is going to repeat their 2021 feat and achieve that $40 billion of net income in 2025. And when I apply a multiple of 25, this company would be worth about $1 trillion. With respect to the number of outstanding shares, I'm assuming that they will still have 2.65 billion. This is the number of outstanding shares that they have currently. So I'm assuming that there will not be any dilution. Even if there is dilution, Meta is going to buy back a lot of those stocks and keep the count to 2.65 billion in 2025. So with that in mind, the stock price in 2025 would be $377. But currently it's at $94, right? That's about a 4x or a 300% gain in about 3.5 years. That's an attractive gain. Now let's talk about the risks. Number 1 is if Meta fails to achieve that AI algorithm that's going to enable it to catch up to TikTok, then it's going to hurt their net income and the stock is going to plunge. Number 2 is if Mark Zuckerberg decides to double down on the metaverse investment and continues to spend more and more money on metaverse, even in 2025, the stock is not going to go anywhere. It's going to stay in the $90 or even get to less than $50. Number 3 is we're counting on Meta decreasing their operating expenses by laying off about 20% of their workforce. If that doesn't happen, the stock is going to stay where it is now. Number 4 is Apple and Google. If they make more and more changes to their operating systems and restrict Meta from tracking the data, that's going to hurt Meta further, and that's going to affect their net income and the stock price. Overall, personally, I like the risk reward with Meta stock, and I'm going to purchase a little bit of Meta stock at this current price of $94 and maybe add to my position up till about $3,000. There's so many low to medium risk 2x opportunities, so I cannot spend too much money on these high risk, high reward stocks.